Hey guys, Rick here. It is the weekend. Today is Sunday, so it's about 11:30 in the morning, and I was doing some testing. As of yesterday, Apex order prints have been released, and I'm pretty excited about it, and wanted to show you one of the strategies, or the strategy that I utilize on my trades. It is going to be referred to as institutional controlled reversals. And I wanted to break it down because this past Friday would have been a perfect example. I didn't even have to cherry pick much of anything to show you how this works utilizing Apex order prints. So first, I had marked up a couple charts, and I wanted to show you a trade that I marked up, and then I'm gonna run backwards and show you some more of them. Okay, is this the trade here? Yep, this is the one that I actually took and ran for 100 ticks on Friday. This trade right here. So, is this the chart? Okay, so this is this chart right here. So I took the time to mark it up a little bit. But here is what the 9 to 19 theory is in a nutshell. What you're looking for, what I'm looking for, is clusters of abnormally bigger amount than previous bars. How far you go back to see is up for interpretation, but I'll just take a glance and see that we're kind of in the hundreds, high hundreds, 200s, 300 sporadically, and then you get this big print here, 700s, 1150 on the buy side, and so that was an eye opener at that point. So when this bar closed, you have this white bar here called the high volume node, or the control area, I believe it is, for order prints. And what you do is you want to count upwards, in this case 9 to 19 ticks, and see if that is some type of a level. So we'll just start with the bar. 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9, 3, 3, 3. What is that? 50.05. Now let me go back to the big picture. So 50.05 would have been the start of a level, and you would count that up to 50.15. Okay, 50.05 right here. If I can get it. Come on. Okay, anyway, this is where this action happened. And if you look back, and you can see that we was in a wick back here at 9:30 the previous day, and it reached all the way up to 50.15 actually, and that would been, this area would been either a supply or a resistance level, however you interpret it. So, and this is also a previous day low before this big red broke down. So this was a valid area to look for some type of a reversal. So what you're going to do is count up 9 to 19, and if it breaks the 19, this cluster becomes invalid. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So it reached 15 ticks before a reversal, but you have no idea if that's going to work out real time. But you have several clues here, and your first one is momentum. I mean, not momentum, but the sheer number of orders coming in. You have 4,000 on total volume here, almost 4,000 on total volume here, and you have 19,000 on total volume. That is just a sheerly big number. So more times than not, 90% of the time, that's going to be institutions coming in. I almost say 100% of the time during these hours, during the U.S. session. And then something else significant is your net volume, or your delta. You have 400, 300, negative 100, and then you have 3,000. So that is a big number going into this. And what is happening is the institutions, they have to create liquidity, because chances are all these orders from here up on the sell side, on the left side here, that's them. A great majority of them are. They can't put out 5,000 orders on one price level, because that just shows their hand. And I mean, that's just easy pickings to see where to hop on at. So they have to spread their orders out over several price points. So that's a good chance that a majority of these are these guys, and probably still going on down into this when it turns south. So that's one clue to look for. The second clue to look for is momentum. Because they have to create liquidity, they have to trap folks into thinking that this guy is still going to go long. So they push out all these orders, a lot of these orders on the buy side as well. So a lot of these were institutions that were pushing up, and convincing retail traders, or people that have no idea what's going on. They just see the momentum going into it, and they just wanted to hop on. So a lot of these guys, while some of these are institutions, a majority are retail traders that is creating liquidity for the institutions. Or I say institutions, it's just smart money. It could be HFTs, it could just be some big wig roller, but I just call them institutions. So it's somebody that's know what they're doing. They're market movers. So at this point, looking at the momentum coming into this, because this was a lot of pressure up going in, and it's signified by these double bolts on apex order prints. So that is a telltale sign to watch for as well. So you watch for the sheer amount of volume, and you watch for the double bolts. Not single, but double. It has to be the double bolts on this one. The momentum going in the total volume, and the momentum going into the delta, the net volume. Okay, and the third thing that you look for, or fourth thing that you look for, is absorption. So somewhere between 50.04 and 50.10, the sellers started really soaking this stuff up, and they wasn't able to push up much past, they wasn't able to push it past 50.11 at all. But you'll start seeing a lot of absorption coming in here, and typically with this, you'll get an X in this area, let me see here. See, like you have the star right here. Oh, there's one. You got an X right here. This will show up as red. So it's not necessarily the case, but watching price action, you'll actually be able to watch the absorption. So it's going to take a little bit of skill to be able to see that, but you'll see that come into there. So we're at a valid level, as this right here between 50.05 and 50.15 is a previous day high. Previous day high. This is a support level. I mean, a resistance level or a supply level. You got your volume coming in, you got your absorption, and you got your sheer amount of just volume coming into this one. So this is a perfect storm setup for it to go short. So these are all your traps on the right side here. So entry can be anywhere from, you can actually use your deviation line for entry as well. But when you count up 9 to 19, normally you can get an entry in there somewhere, and always run with a 10 tick or less stop. So 1, 2, 3, 4, 5, 6, 7, 8, 9, and we'll just say we use 9 as complete threshold. So entry could have been short 50.05 would have stopped at 50.15 for your 10 tick stop, and this trade would have worked out, obviously. Watching how it goes into that one there. So let me pull my chart back up. So, okay. Significantly more orders coming in, which is signified there, that will form in a cluster area. And when I say a cluster area, you might get some big print sporadically, but typically more times in a reversal, you'll get a lot of them stacked on top of each other. So I consider 3 a cluster. So based off the high volume node, you have prints of 700, you have prints of 600, 400. So it's up for interpretation again as well, but it'll be significantly bigger than anything that's happened way back here while it was just kind of putting along. So that'll be one thing there. Now the 9 and 19 theory, which states that continuing with the uptrend to 19 ticks from here, 50.15 was the threshold, I believe. But starting at the high volume node, where was I? Continue with the trend up to 19 ticks above the cluster. Institutions will trap traders by continuing with the trend with momentum. Okay, this is important. It normally always happens with momentum. Within the 9 and 19 tick area, absorption will commonly occur. So once you get up above 9 ticks, you'll start seeing sellers start absorbing orders. I mean, it may tick up a tick or two, but it's not going to push up with momentum anymore. Okay, it will give the appearance of a continuation, often bringing in more orders. And this is everything that's circling these white blocks. These are traps. These are trapped traders. So, because it appeared that this momentum bar was going to continue to push up, and folks just got long and stayed in on hope. So, this is how retail trading thinking is. So you get in and it's, they'll set a stop, but normally it's way too late and they're coming out with a loss. So, okay, where are we? The area often will happen at a significant level as well. Deviation levels, like here. Institutional zones, which, let me just move this out the way for a moment. This is what an institutional zone looks like. I have them marked off in the black squares. So you have them here. You got some way up here. We're currently in one on this channel down here. So this is where the market closed on Friday. So this is areas that is possibly could show reversals. Let's see here. What else? Support resistance lines or supply demand lines. In this case, it happened to be a previous high, which I had marked or spoke about earlier, or a supply line. Notice the momentum of total volume and net volume. So this is the total volume. This is the net volume. Net volume is commonly referred to as the delta amongst options traders and futures traders, but the delta is, so I may use those terms interchangeably because that's what I'm used to calling it. But net volume is the difference between the buyers minus the sellers, and that's that'll be your number there. So, and then significantly more orders on this as well. Once a cluster is formed, count up 9 to 19. In this example, it was 15 ticks, and that fits within the 9 to 19 threshold. And everything in white, these are trap traders thinking the market was going to continue up. Many times institutions will play both sides to give that illusion. What they are doing is creating liquidity to scale into the short. So they can't put 5,000 orders out there. So they have to spread it out in 500, 400, 300 lots and to hide their hand. So that's the game that they have to play, because showing your hand is trading is, it's really just one big poker game. So you have to learn to see what they're seeing. But seeing the big picture is crucial. It is absolutely crucial. So I use a 30-minute chart. So this will work on diagnostic charts. It will work on your continuum charts. So you just have to learn what you're seeing in that particular market. I only trade CL, so this is what I work with. So notice all that action happened right here off of this wick, and this is the previous day high back on Thursday, and kind of give you a heads up of a trade location. So the 7 deviation up to the 1 deviation would have been an ideal trade location to start watching for these big cluster prints right here. Looking at the big picture for trade location is crucial. Notice how it wasn't able to close above the 7 deviation line. So it tried, and this is the price action that happens within it, and all these orders built in within that. So also notice the resistance level to almost the exact tick. So it came up pretty much to I forget what the actual number was. I think it was off by 2 or 3 ticks. And in many cases, you can get the exact feel with institutions and tighter stops, as the moves rarely take a long time to play out. So these happen quick. So you kind of know you're in the right trade when you get in and you can get some of your position off really quickly. I mean, I'm talking within a minute or two at the maximum. So sometimes it does play out longer, and previous weeks in CL, it has taken a little bit to get on out of the initial trade, but I am what they call a scalp to position trader. So I trade multiple lots, and I take half off at 10 ticks. And because of that, my trading seems to work out really well. Even if this happened to be a pullback or a counter trend move, I can get half off and then stop moves to break even. So I have to think back on this trade. I think I got in kind of late on this when I was seeing something else. And I think I got in down here at 96, but it was way back over here. And at this point, just as my example, I peeled half off at 86 and then stop moves immediately to break even. So the contracts you have after that moment, that's just a free trade that you can manage and do whatever it is you need to do to be able to stay into this trade. So, all right, that is just a rundown of how to get into a trade, what will be referred to now as institutional controlled reversals. This is how to do that. Managing it is fairly simple, but I will do that in another video. So I just kind of wanted to show how that one actually worked on this trade here. Now what I'm going to do is run back to about 6 o'clock or so. That is into the London session and pre-market of the US session. These are the hours that I trade. So we'll start here. We'll start at 5 o'clock. No, 5 o'clock. Okay, we'll start at 5 o'clock. Yeah, okay. So you got momentum down, and you have a cluster here. So it's a little different with pre-market. The numbers aren't going to be in the thousands, or rarely will they be in the 1,000, 700, or 800. So you have to adjust according to what you've seen before. So you got hundreds, 200s, a few 200s here. You got this 300 print with 100 above and below. This would be up for interpretation. So I don't trade this hour, so I definitely wouldn't have been in this trade, but I'm going to show you how it would have worked out if you chose to take in this trade. So first sign is total volume. Total volume is significant compared to a lot of these bars right here. Next would be your net volume, or your delta. It's fairly significant compared to the rest of these bars that you see here. So we'll just utilize this as a cluster. Because this was going down, you're going to count down 9 to 19. 1, 2, 3, 4, 5, 6, 7, 8. So we got within one tick here, still nothing. Channel along, 8. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. You got a trigger level, 49.36. What you will do is go back to your big charts and see if something significant was in that area. 49, did I say 48 or 49? 49.36. 49.36. 36. Well, what do you know? Right in this area, you have a deviation line from yesterday, and those are still significant. And then you also are getting really close to settlement at 49.28. So this was 9. Count on down to 9, 10, 11, 12, 13, 14, 15, 16. I forgot. Where am I? 44, 34, 24, 25. Okay, this will be your 19 level. This will be the final threshold. So if I was looking, I'd possibly been looking for a entry right there on settlement. Didn't quite reach there, but chances are you saw some absorption right here. There's a good chance of that. So that trade obviously went up at that point, so that one would have worked out. So, but let's go to some. Okay, now we're in the hours that I'm looking at. Okay, this was the trade. This was the original entry trade here. Okay, here's one. This one would not have worked. And this is just trading. So I've yet to see a strategy that's 100% successful. Okay, you got this down pressure here. 800 prints, 4, 600 prints, 2, 3, 3, 3. 5, 4. So again, up for interpretation, just depending on how far back you want to go. But let's just say this trade was valid. So 12,000 prints, got double bolts, 12,000 total volume, negative 1,500 net volume. That is fairly significant number, so I might have actually raised an eyebrow to this one. Volume cluster here at 49.38. Count back 9 to 19. Let's see here, 38, 28, 29 would have been the 9 threshold. 19 would have been the 19. Okay, this would have been the 19 threshold down here. So it may or may not have worked. Who knows? If you would have got your entry here, the bar closed up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Half off, break even. Who knows? That might or might not have worked. I don't know. But that would have just been a stop to break even. That's one reason that I am a scalp to position trader. Okay, let's go on to the next one. Let me see here. All we're looking for is double bolts. Okay, I think that was it. Nope, I didn't do this one here. Okay, here we are. Market going up, double bolts. So significant total volume, significant net volume. Not really liking the cluster size, but we'll work with it. Count up 9 to 19. 1, 2, 3, 4, 5, 6, 7, 8, 9. 48.80 would have been the part started with 9. 48.90 would have been the 19 threshold, right on the 5 deviation line, a valid level. So we'll say we'll take a short on the deviation level here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So probably got half off here and bounced around and stop move to break even. So that would have been a scalp trade unless you would have jumped right back in and then got back in on that one there. So again, that's why I'm scalp to position. I don't see, did I do this one? I don't think I did. Okay, this one is more what I'd be looking for right here. Huge prints, 1,200, 1,000 prints compared to everything else. 200 prints, 300 prints. So yeah, this would be ideal. So after this bar close, you got your double bolts, total volume, double bolts, net volume. Big cluster here, countdown. 1, 2, 3, 4, 5, 6, 7, 8, 9. 38 would have been the initial area to watch. 10, 11, 12, 13, 14, 15, 16. Okay, this trade would have been very valid. Entry probably would have been, just looking at these prints, I kind of can tell where absorption is, and this one was most likely at 48.39 to 48.40, somewhere in that area. So we'll just say entry is 39. Caught no heat other than a couple ticks on this next bar, and off to the races. So scale out half to break even there. So all right, guys, that is pretty much how 9 and 19 works, or institutional controlled reversals. And I will continue to do videos on my trades throughout the day when I do trade. And my hours I normally trade are from 8 o'clock Eastern Standard Time till lunchtime, about 12 o'clock Eastern Standard Time. And these are the only trades that I look for during those times, is these type of reversals. So I use a few other things, but it's not necessary, particularly for people that are just looking for these things here. So this is how I'm starting to understand Apex order prints, and hopefully this will help you guys out. All right, thanks for watching, and we'll see you actually in a few hours. Let's see, probably a little less than 24 hours. All right, have a good one. Bye.